Hi guys, hi traders, welcome to Pips Dojo. I'm so glad to have you. My name is Joseph, and I'll be your friend for this session. All right, so I'm going to be showing us a strategy that you've probably been hearing as a trader. It's one of the most popular strategy, right? And arguably, people say it's the best strategy out there right now. Alright, so undoubtedly it's a very good strategy. So I just want to show us a thing or two about this very strategy, and that is what the candle range theory. The candle range theory, that's the CRT. It's a very formidable strategy if you can know it. In case this is your first time hearing of the strategy, or in case you've been thinking about how to go about the strategy. So CRT is simply a model of trading that follows the power of three, something like the accumulation, manipulation, and distribution, where you have a range, right? You have a range, and then you have price manipulates either the high of the range to take out the low, right? Or you have a range and you have price manipulates either the low, either the low of the range to take out what the high. So something like this, it's a very good CRT replication. So first thing you want to do when trading the CRT is you want to understand that there are various kinds of CRT. Okay, CRT is the kind of strategy that works with candle anatomy. So you have to know there are various kinds of CRT. You have the multiple candles CRT, you have the three candles CRT, so on and so forth. Okay, you have to really understand it. But in this very video, we'll be talking about three candles CRT, and that is simply the kind of CRT that shows that works with three is what determines the range. Right, the first candle is the range of the CRT. Right now, it is at the second candle you know that it's a CRT model. So your first candle goes like this, then the second candle manipulates, right, either of the top or the bottom, wherever. So you have something like this. You have something like this. Now, once something like this forms, okay, let me label this to be um the black. Yeah, so once you have something like this, you have a bullish candle right here, then you have a bearish candle that mitigates, that manipulates or clears the liquidity of the first candle, either at the top or at the bottom. Okay, for this example, this one happened at the top. So this is what happens now. This is a CRT formation. So what you are looking out for now, if you will be looking out for trades, once you have your confirmation within this range you'll be looking out for trade to take out the low. Okay, and this formation usually look out for it in the higher time frame, right? In the higher time frame, once you see something like this is a possible scenario of a CRT playing out. So you look out for something. So another thing you want to take note of when looking out to take the CRT model is you want to be careful, or you want to be very selective with your key levels. Key level are non-negotiable. In MSN now you hear me talking about key levels almost all the time. So right here as well you'll be needing what key levels, and then I will recommend some very nice key levels. And I think I have a video on CRT, that's learn CRT in 13 minutes. It's on my channel, you can check it out. It's more detailed. Okay, it's very very much detailed. Right, so your key levels, right, you can from your studies derive the best key level that you think price displays best from. Okay, but right here, one of the key levels you can use is the imbalance, the fair value gap. So one of the key levels, or the key levels I'll be working with in this video, is the fair value gap. Alright, so let's look for candle pattern that have something like this, or that have it in the opposite direction. That's a black candle here, a white candle that mitigates the low and doesn't take out the high for the second candle. Then what, we have our CRT formation now. Then we'll be looking for a buy to take out the high, or simply something like this: first white and bullish candle, a bearish candle that takes out the high, then we'll be looking for something to take out the low. So it's as simple as that, right? Okay, I think I see something. Right, so you see these three candles, right? So we can take this as the range, we can take this as the range, we can take this as the range. Okay, as you can see, the second candle manipulated the high, right, and closed within the range. So now let's look for trades that will take out the low. Okay, note this: it doesn't, not every time you see these two candles formation that necessarily it has to go down. There are things that you must watch out for. You must watch out for confirmation, you must watch out for key levels. Okay, once these things are there, then it has a much more higher probability. But if you don't see them, it can simply just come here and then just go up. Okay, then you start saying this and that and that. So try and watch out for these things. All right, try and watch out for these things. And anything you're doing, try and do it rightly to the best of your abilities. So let's go into this example, right? So once the first candle formed, that's the range candle. Then the second candle is the manipulation candle. So after the manipulation candle, we are looking to enter a trade in the third candle, or the fourth, or the fifth, or the whatever, right, to take it to the low, as far as the what, the low, or the other side of the range has not been cleared. Okay, this is the daily, and mind you, our key level is the what, is the fair value gap, as you can see, right? Oh, okay, let me change this. Our key level is the fair value gap. Our key level is the fair value gap. All right, so no need for me to put this, you already know. So let's check out, after the first formation and second formation, let's go to the 1 hour time frame and see what we can have. So there are, that's what you have to understand. You see, everything works together for your good in the market. So you have to be a man of vast knowledge, or a woman of, vast knowledge. So you have to understand that everything works together. You have to know different kind of entry models. Okay, so in this case now, you could enter with the MSNR entry model. You could enter with your SMC typical entry models, right? I talked about one the other time. I talked about, let's say you have something like this. You have a structure going up, you have a structure, you have a structure, a structure. Yes, you can enter with something like this for a buy, vice versa for a sell. And you can simply enter with your typical, kind of break. That is the hope, then a break, then you enter, right? Then anything, literally. So you have to be very vast with these entry models. So on the 1 hour time frame, we are seeing a break right here by the, there was a confirmation. This one of the confirmations you could look out for, a break in market structure. So let's take out the OB, right? So I would mark here for my OB, right? When you're picking out your OB, you should be careful to pick out the OB that has, a fair value, something like that. So I'm picking out here for my hobby. So you could have easily gotten a 1:4. Okay, this is doing the second candle. Okay. Let's check out something. This happened during the second candle. Okay, so we're taking entries from the fourth candle. Right, very good. This is a little bit more challenging. So we have our confirmation, we have our mitigation of the hobby, and then let's go to the 15 minutes by the third candle now and see whether we can actually get, an entry. Let's go to the 15 minutes and see whether we can actually get an entry. I like that. I like that. Let's go to the 15 minutes. So there are a lot of entries I can actually use. This is the break, this is the rejection, right? Now in the tapping back of the demand of the supply, we had a confirmation as well. This is another break, right? A confirmation coming to the OB of the break or the QM, right? You could have used something like this, right? Or you could have used something like this as your entry model. You see it's touched it so you could have used something like that. So you have to be vast. You have to be vast. Alright. So this CRT is something that if you sit down with it, you work on it, something that will give you a very, very, very good edge in the financial market in your technical games. Okay. Alright. So you could have easily had what, a 6 weeks reward. So that's simply it, guys. In case you've been wondering how to go about using your CRT, make this as your basis. You can check out my other video, learn CRT in 13 minutes. It's a very powerful CRT knowledge I downloaded in that video. So it's on my channel, you can check it out. Right. So eventually it's CP. Okay, this is one of the way to go about your CRT trading. Alright guys, I hope you've learned 18 or 2. Once again, this is Joseph. This is Pips Dojo. Welcome to this channel once again. And tell your friends about it. I'll see you in the next video.